I want to first just give a little bit of a recap to the US economy and kind of where it's at and give a broad picture of what's going on. All right, so the current state of the US economy, the graph that I have here is the buying power of $1 over time, looking from 1960 to 2024. As you can see, has been a serious drop in the value of the US dollar. This is something that we have been talking about at WHVP for a very long time, and part of why we offer the services we do to American clients looking to move offshore and diversify to protect against the devaluation of the US dollar. So some of the things that really stand out in terms of the US economy currently is we see a lot of numbers coming out and people talking about it's a good economy, it's a strong economy, unemployment is low, and unemployment is certainly low. Inflation seems to be remaining sticky, but there's a lot of other factors that need to be observed, especially when looking at the public and the outlook of the United States economy. And that is, first off, American savings are depleting. In 2021, Americans had a collective savings, overall of about $2.4 trillion. In 2024, that was only $600 billion. So you can see that the savings of Americans are being depleted. Credit card debt has risen over 1.1 trillion. It's actually come back just a little bit this month, but we see an incredible increase there in terms of even in the fourth quarter of 2021, when everything was kind of being hit hard. We saw an increase by $273 billion in the time frame. There we see credit card debt continuing to rise, so much so that the credit issuers are trying to see how they can get that money back quicker. Again, like I said, inflation remains sticky, 3.4%. There are a lot of speculators saying that the US Fed would drop their interest rates already in the first quarter. That got pushed back, okay, maybe in the second quarter, and now speculators are saying maybe the third quarter. We'll see what happens. I mean, everyone was touting this, reduction in inflation, 3.4% as a good thing, and that will ensure the Fed will lower the interest rates, but they don't want to see interest spike again, especially as the basis effect from last year takes place. So they'll have to, see how it goes in the months to come. Government debt, $34 trillion. This is nothing new to Americans. It was the political instability or changing environment in the US plus the government debt led to the US losing its credit rating or losing going a step down from its AAA status. And economists and bank CEOs in the US, James Dimon famously said it doesn't really matter that much. Janet Yellen was outraged that they lost this, stating that it was a ridiculous thing and it shouldn't have been done. So they seem to ignore the debt that sits and looms over the economy. And certainly, if there's no way to pay off your debt, you need inflation to pay that debt off. It's the only way you can really beat that interest rate. I mean, the US government budget is going to be 25% just to pay off the interest rates. So we see a lot of challenges there, especially in how the debt ceiling just keeps being lifted, depending on, the political leverage at that point in time. Then we have the global trend of de-dollarization as countries look to set up trade agreements, trading commodities directly with each other in their own currencies and no longer in the US dollar. And this is the beginning of a slow trend, away from the US hegemony of the US dollar. Do we think it's a night and day change? No, but it's that slow tick away. And with the amount of currency floating or US dollars in the system, it certainly presents a challenge to the value of the US dollar. So enough on that. We will move on to the presentation and what we'll be covering. Before I get into that, I want to tell you about myself a bit. My name is Jess Roberson. I'm a relationship manager here at WHVP. I am involved in many things here for the company, including investment research. I'm in charge of onboarding clients that decide to go with us to use their services, and I also manage my own clients And then I work with marketing implementation and strategy for the company. In my free time, I play with Swiss national rugby team. I enjoy being on the field and challenging myself there, not only in the office, but in the off time. I married a Swiss woman. As you can hear, my accent is not Swiss. I am an American, married a Swiss woman, moved here about 7 years ago. Haven't been enjoying it. I studied finance and international business, and I speak English as my mother tongue and German and Swiss German dialect. All right, so let's get into the content. So first we'll be talking about offshore banking benefits for American. Why is there even a reason for offshore banking? Why is there even a reason to, as an American, move offshore? Then we'll talk about the jurisdictions, and then offshore investing and working with WHVP, and then we'll have a section of questions and answers. All right. Moving on. All right. So the benefits of an offshore account, bank account. First, you get access to international markets. Often this access is not available or difficult to get in the U.S. due to the regulations and the knowledge or even access to these markets. Often the investments that you want to get will be denominated in U.S. dollar. If you want to hold a foreign company, you can get an ADR and hold it in US dollar, but not get any benefit of the currency that it's in. Excuse me. Then we have asset protection and overall enhanced privacy. Enhanced privacy protection. Here, you move assets into a different jurisdiction. That's where the geographical diversification and portfolio diversification come into play. It diversifies your asset holding itself, so it's not sitting only in the U.S. financial jurisdiction, subject to the U.S. economy, the U.S. dollar, and any sways that go back and forth. You find a safe, stable financial jurisdiction that has different regulations governing it. You have overall enhanced stability, which we'll talk about in our next page. And then you have the insulation against the depreciating U.S. dollar, which we talked about in the graph in the overview of the U.S. economy, where you see the U.S. dollar continuing to lose value. And by moving out and going into investments in other currencies, you can hedge against that in investments that are in a currency that has performed well against the U.S. dollar in terms of appreciation for the value. So again, why offshore banking? For many years, wealth managers in Switzerland have told Americans, we've told Americans, you should move about 25% of your investable wealth outside of the US to be invested in the international markets and international investments. And Vanguard actually did a study on this to look at a stock portfolio investing. Where could you get the reduction in volatility? This is coming to that stability factor. And there's that sweet spot right around 25 to 30% of your investable wealth. If it is invested outside of of the U.S. markets or in international investments, then you see a reduction of 3 to 4% in volatility. So you stabilize your portfolio's volatility in the overall context. I mean, you can see it at the lifetime or in a 10-year expected reduction in volatility. All right, so let's move on to the jurisdictions. One of the ones that is well known is Singapore. It's at the heart of Asia. It's a city state. Their banking sector is dominated by traditional banks. What we mean there is they are the classic retail and investment banking, traditional kind of setups. They're the third largest offshore jurisdiction for private wealth. They manage roughly 1.5 trillion in cross-border wealth, so wealth that's brought in by clients from outside of the country. Singapore, it's quite interesting to see when you look at their banks. They have quite a lot of banks that exist in Switzerland that work with Americans. And a lot of these banks, I mean, especially the top private banks in Switzerland or in Singapore, are either based out of Switzerland or Liechtenstein, and they have offices set up there to take care of clients there, manage their cross-border wealth. So it is quite interesting to see that even the top private banks there handling these investment type accounts are the ones based out of Switzerland. Foreign clients are usually seeking Singapore for the Asia region and business. Singapore is a very safe country. They're politically quite stable. They have strong controls. Their financial jurisdiction is regulated by the monetary authority of Singapore that does a good job watching the banks. A lot of the banks here are focused on business type ventures, business accounts. However, they do private wealth. Usually the entry there for a lot of the top level private banks is $1 to $3 million minimum investment. A lot of these are your classic banks like Pictet or Bordier, EFG, Julius Baer that exist there. It's quite an interesting market in terms of the options. They don't have a lot of local banks in Singapore. I think there's only 6 out of 132 banks that exist, but they still offer that kind of security inside of the Asia region. Next, we have Hong Kong. They have 75 of the world's largest banks operating on Hong Kong. Hong Kong is a huge industry in terms of how they run their banking sector. They draw in lots of money from China because Hong Kong doesn't have the same currency controls that China does. Hong Kong currently is the second largest offshore jurisdiction for private wealth. They manage $1.2 trillion in cross-border wealth. Many U.S. banks operate in this jurisdiction, as well as the top private banks, very similar to Pictet, very similar to Singapore. These are the private banks usually headquartered in Switzerland or Liechtenstein that offer their services to expats and Americans for investing with, again, similar minimums. It's quite interesting to see that Hong Kong, they have a depository protection scheme, which kind of keeps, it's kind of like the FDIC insurance in the US, and that's a value of 500,000 Hong Kong dollars, which translates roughly into about 65,000 US dollars. So you don't get as much protection there in terms of assets being held at the bank on their balance sheets, but they still do offer it. Hong Kong is quite interesting because with these US banks present, they do service Americans, but when it comes to investing services, usually a lot of the banks, both in Singapore and Hong Kong, are reluctant to take on Americans due to the FATCA reportings, as well as the KYCs and all the regulation that goes along with managing Americans. And that is why there's usually a higher level of entry into these sectors as an American into these banking jurisdictions. But again, they do offer them to Americans. Hong Kong in general is relatively safe and stable for the most part, and offers quite a nice area, especially when you're looking to do stuff in Asia. So the next one is one out of Hollywood, some could say, the Cayman Islands. For the size, they have an incredible amount of banks. They have 86 banks that operate in the Cayman Islands. I think it's like 40 of the 50 largest banks in the world operate in the Cayman Islands jurisdiction. Cayman is known for their incredibly strict privacy laws. They're the 8th largest offshore jurisdiction for private wealth, managing about 500 billion in cross-border wealth. It is quite difficult to get into an account in the Cayman Islands. You have to have a serious amount of wealth due to the structures that they take in place to be able to open a bank account. And further, they don't have any implementation of a depository protection scheme or guarantee scheme, which is like the FDIC insurance, something that's quite interesting. It's the only one that we're talking about today that doesn't really offer this type of insurance on any of the deposits in the bank. I think the last thing there to mention is it's always important on any jurisdiction that you're looking at that you do your due diligence, that you look into what is available to you and what are the options, what is your financial situation, and doing the due diligence on the banks that you're going or looking at to be working with. So next we have Liechtenstein. I mentioned them earlier. They're a very small country nestled in between Switzerland, Germany, and Austria. They have 11 banks operating in Liechtenstein. They almost all focus on private banking, which means their business structure, different to traditional, focuses on their revenue stream being from the service fee or the client fees that they take. What this does is it does cost for the bank account. At the same time, they are taking on less risk in terms of lending and taking on, I guess, leveraged debt to earn money for the bank. It is connected to the Swiss financial jurisdiction. They use the Swiss franc, which is a safe haven currency. They follow the depository guarantee scheme, which ensures 100,000 Swiss francs on the account there, and their capital ratio, so how the amount of liquid assets that they have to be able to hold in the bank, that they keep in the bank, is 21.8%. They're one of the safest jurisdictions that you can find in terms of the lowest level of risk in their banking sector because of these high levels of capital or capital ratio averages. We work with a bank in Liechtenstein, and when we looked at their balance sheets, we saw that even just in their lending practices, they had such a low level. They were such a well-managed bank in terms of how they make sure that their profits are coming, that they can exist from client fees versus lending, giving you a free account, but lending your money out and giving out mortgages or various forms of debt to earn an income for them to drive their revenue. Finally, we have Switzerland. This is Liechtenstein and Switzerland are what we as WHVP are intimate with, that we work in and inside. They're ideal for Americans in terms of how they operate. The barriers to entry are usually lower because of the level of competitiveness of Switzerland. As you can see, Switzerland has 243 banks that operate in Switzerland, so even more than Singapore and Hong Kong, which are their largest competitors in terms of cross-border wealth. What this allows for is a lot of competition. Switzerland in general has a focus on private banking. They do have those commercial real estate banks like your UBS. Switzerland is the largest offshore banking jurisdiction for private wealth. They manage 25% of the global cross-border wealth, which roughly makes up $2.5 trillion in assets that they are managing. Foreign clients always flock to Switzerland in times of crisis. This is because the Swiss franc has been a safe haven currency for many, many years due to the political stance of neutrality and military stance of neutrality. Also goes back to the history of managing individuals' wealth for hundreds of years and having banking practices and ideals as common practice for generation upon generation. And the jurisdiction is set up with an understanding for foreigners or that money being brought in so that the regulations are there to understand, the experts have an understanding of the clients that they're servicing, and the banks have an understanding of what's needed. This is especially important for Americans in terms of remaining tax compliant with all of the rules and regulations that the U.S. Requires for U.S. clients or U.S. persons in terms of reporting. And they also have a depository protection scheme that Liechtenstein adopted of the 100,000 Swiss francs. It's quite interesting to see Switzerland in all of this. where all of these banks that were operating in Singapore and in Hong Kong are based out of Switzerland and Liechtenstein. And in that sense, for us, where these jurisdictions, you can certainly do your offshore investing and banking with them. It doesn't seem to make a whole lot of sense to go into a different jurisdiction when the headquarters is in a jurisdiction that is quite attractive, especially for Americans. It's a little bit closer to home. And also there's the more of that Western mindset, so you can understand a bit more of how they work. They can understand who you are and what you need. And that's what we like. Also, because of the competition, the entry to getting an investment account up is usually quite a lot less. They do have some minimums that are between 1 and 5, but you can open up an offshore bank account here in Switzerland with 500,000 US dollars, which is a lot of money. But when comparing it to the entry points and a lot of these other places where you're talking with these top level private banks, you're looking at $1 to $5 million before they'll even look at you. Some of them won't even look at you under $5 million. And so Switzerland offers that nice competitive market for players who are entrepreneurial focused, banks that are entrepreneurial focused, for client services to take on clients with less or a lower minimum investment. So those are the jurisdictions. I want to talk about what it's like working with a asset manager or a wealth manager, like what WHVP does. Why do we do what we do? Why do we talk about the banking jurisdictions? What's important about it? And what's important to say here is we are your partner in the journey offshore. It is not about us on this journey. It's about you. So we've spent over 30 years serving US clients. We were founded in 1991. We're now in the second generation. You can see our team here on the right side of your screen. You can see Jamie and Urs Freihoff de Rose. They are the second generation. They took over from Jamie's father, who was the founder. We are SEC and FINMA licensed. SEC is the US regulator, and FINMA is the Swiss financial regulator. You have to be licensed with them to operate in Switzerland as a wealth manager. We're family owned and operated. We exclusively focus on US clients. So we want to make sure we have the deepest understanding of what you need and what are the considerations that Americans need. And in finding the private banks to work with, we have to know that they know your needs as well and have services that set up to take care of you. We partner with private banks here in Liechtenstein and Switzerland. None of the ones that I mentioned today, because they are, to a certain extent, finding the right one makes more sense when you can find competitive, client-focused people or banks that are willing to take on clients with 500,000. But we do work with larger institutions, depending on your financial situation. We work with a couple banks that we suggest to you that we think will fit your situation the best. In 2021, we were awarded the best servicing for North Americans. It's something we're proud of, that we work hard to make sure that we offer services that meet your needs. So what does the setup look like when working with an asset manager in offshore banking? We work with the limited power of attorney with you as the client in the pinnacle of the relationship. We as the asset manager have went out and found banks that meet the needs of American clients and have profiles that we find to be helpful in giving the best client service that is possible and finding the right agreements for our clients in terms of pricing when it comes to setting up a bank account. You open the bank account yourself. We aid you in the process. We lead you through every step and make sure that things are completed. So we act as your partner. We walk you through the account opening documents, but the bank is in your name, whether you want to open it in a personal account or a joint account for you and your partner, a trust account, an offshore trust account, or even we work with individual retirement accounts. Again, we don't have any ownership in the account. It's all yours. We just help to build the portfolio and manage the account so that you can rest easy and build the trusting relationship with us. And we make sure that we communicate quite strongly, and we'll talk about that in just a little bit. So how do we go about investing? What kind of investments do we, what approach do we take to investing? We're long-term capital preservationists in the strategies that we set up. So we're looking to preserve the value of your hard-earned wealth while growing it. We exclude the US market and the US dollar investments. It doesn't make sense for you to move assets offshore and then invest back in the US. It's cheaper to do it in the US, but investing overseas takes an expertise and an understanding of the markets and the regulations and understanding you as an American client and what you need. So that's what we focus on. We do direct investments in stable economic environments. So we, in general, when we go to the investment process of making a decision, we look at the country and its currency. We look at its positioning, its regulations. How is the government set up? How does their financial system work? What does their central bank act? Are they responsible? And what's the future of that currency? Then we look, once we've done that assessment, we've highlighted some interesting areas. Then we look at the industries of those countries. How is the economy set up? What are they good at? And once we've highlighted interesting industries, then we go to company attractiveness. So from industry to company, we look at the companies that are strong players in the field, and we do an analysis of their company and the financials and look at what's a fair price for what they're doing, what's their future. In general, we look for a 3 to 5 year time horizon when taking on an investment. We want to buy and hold. We're not trying to time the market. We're not trying to speculate. We want to buy good companies that will prove themselves in the long run and make good investments that show their merit. So what does the process look like of setting up an account? Pretty straightforward. Schedule a free 45-minute consultation with one of us, and we sit down together, talk about your financial situation, how we might be able to help. You get to know us, we get to know you. We see if it's going to be a right fit for both of us. Once a mutual decision is reached that we would like to work together with each other, then we get some information from you so that we can present you to the bank. Usually this is a copy of your ID, an investor profile, what lays out some of the details of what your portfolio or what your profile looks like, so we have a better understanding of who you are, what you're trying to accomplish, what's your time horizon, what's your risk tolerance level, residential address, and any source of fund documents that need to be obtained. Then we go on behalf of you to the bank and present you to the bank. So you can do this all from the comfort of your home. There's no need to travel or come to Switzerland. It's all done from online through Zoom calls and emailing back and forth. Once the bank has accepted you as their client, they send us the account opening document, which we pass on to you. You complete the account opening forms, send them back to us. And once the bank has confirmed and accepted all of these documents, they open the account and it's ready for the funds to be sent. And then you send the funds into the account. Once the funds arrive, then we have an initial investment meeting. In the meantime, we had been that the account opening is going on. We've been working on creating a tailored portfolio to your needs. And in this meeting, we discuss all the investments, why we were planning these investments, what we think, how they fit, what we like about the investments. So you have an understanding of exactly what is going to be in your portfolio and what the plan looks like, what the strategy is going to be. And then we stay in touch. So we make sure all of our banks have e-banking for the most part so that you can stay connected should you want it, so you can see what's happening. We do regular calls up to 4 times a year, depending on if you want it 4 times a year, once a quarter, or 2 times a year, once a year. We talk to you about what the plan is and how much communication you want with us. We have every 6 weeks we release our economic analysis of the global economy and where we think things are going, and comment on the movements that have been taking place that we send out every 6 weeks that you get. And then we have all of our soft communication and social media where we're putting out information that we think is valuable to you. And what is important here is we want all of our clients and our prospects to know they can contact us anytime, and that they don't have to worry that if things are going great, we're going to talk to them constantly, and if things turns a little bit south, we're going to go silent. We are going to try to stay in constant contact with you. We want to answer your questions. We want to make sure that you are well treated. And in the end, this is a trust business, and we have to build that trust. And the only way to build that trust is through solid communication. So that is it for me. If you would like to schedule a 45-minute consultation, you can certainly do that at info@whvp.ch, and reach out to us, and we will set up a meeting of when it makes sense. We can talk to you about your situation.